oh man, this does not look good for crypto. Bitcoin was attempting to break out from this pattern. It did break out, but now we're starting to see some important levels starting to be lost on Bitcoin. I've found the culprit of what's going on, and it's to do with the wider economy. I'm going to break down exactly what we're seeing and what this means for crypto and your altcoin investments. If you appreciate these videos, these emergency videos, smash up the likes. Do not forget to subscribe. It lets me know that you appreciate these videos as and when the market is moving. Like I said, I'm committed to jumping on and giving you guys a video whenever something important is happening. And the important thing we're seeing right now is that we failed to hold this green line. Remember, this is a big bull flag. We were excited a couple of days ago that we finally got the breakout. Great, nice breakout. This is okay as well. We wanted the retest. We spoke about the retest. But this candlestick today, this red candlestick here, breaking down from the pattern is a little bit of a concern. I'm going to explain where I think this could be going and what we should be worried about in the short to mid term. Now, we need to first understand what is going on here. Why are we starting to form? We're going to start off by looking at the traditional markets. Always look at the traditional markets for some clues. And you can see that the Dow Jones is down slightly today. The S&P has just had its back-to-back first decline since early September. Remember, since September, traditional markets have been on an absolute rally, right? Record highs. It's had a couple of days now here to the downside, just a little bit of a cooling off. But we need to still find out what is causing it. And when you jump on over to the bonds, you'll find out that this is where the clue is. If you look at the US 10-year here, over the last 5 days, it's been in a steady upwards trend. Now, this is not good for crypto. Why? Well, the US 10-year is the US 10-year government bond. When the bond yield goes higher, and currently it's sitting at 4.246, it means you and I can go invest in the US government bond, get a 4.24 risk-free rate of return. And so you end up weighing that up against taking risk and investing in the stock market, taking risk and investing in real estate, taking risk, of course, and investing in those altcoins you have, right? So whenever you see that the US 10-year is going up, risk on assets, the risky assets, tend to suffer a little bit. And we're starting to see the early signs of that. The question now will be, is this a change of trend? Right? Is this going to keep happening, which is a little bit worried? Let me zoom out to the yearly chart. I mean, this has started, this bottomed out. You saw this in August, right? 16th of August. And since then, it's been on a nice move, right? US 10 years was gone from 3.6 to 4.24% on your yield, which is interesting. If we then move over, we can take a look here at the Bitcoin. Let's take a look at the dollar index. This is the culprit for me, right? This is the main thing. And again, same story as the US 10-year. This is inversely related to crypto, right? This is inversely related to crypto. When this goes down, Bitcoin does well. And historically, we've monitored that here on this channel, right? You guys know every time we've had a major rejection here on the dollar index, Bitcoin does well, crypto has a bull market, same thing here. And we spoke about how crypto had a really long, tough time during this period, but then this was a good period. And then we spoke about how this pattern had to break to the downside. And it did, right? It did break to the downside and Bitcoin did well from that. But what are we seeing now? We're not seeing a continuation of that trend. See where my yellow arrow is? We did not manage to break that pivot point. Support was held, right? So risk has now rotated back off, which is very, very interesting to see here over these last couple of candlesticks. So this is something you want to worry for. Now, what my view is going to be is we need to start looking at this territory here. We need to put ourselves a little rectangle here, and that we need to get a rejection here. I need to see that the dollar index gets rejected here. Okay, we need to get rejected and come back on another trip down here because we want to keep this trend downwards. We want to keep this longer term macro trend of the dollar index downward, because if I leave that arrow in and zoom out, it reminds you that that's what we need, right? We need this to continue coming down in this direction in order for us to have a sustained bull market heading into the rest of this year. And of course, we want that to overlap into 2025 with the rate cuts we're getting as well. Now, what's causing this slight rotation is we're seeing robust economic data. Right? When you see robust economic data, it's getting the market to think that, hang on, maybe Jerome Powell is not going to give us our rate cuts. The rate cuts that we were expecting, the rate cuts that we're pricing in, maybe he's not going to give us that 50 basis points. And that is one of the reasons you're starting to see the US market just have a little bit of a wobble. Now, is this a moment to panic? Is this a moment to say, oh no, we need to flip the script out? No. It's just a little bit of a consolidation. You have to remember, like I've just shared with you, that Bitcoin's done extremely well. I mean, we're sitting here at the top end of our consolidation, right? This is your bull flag. We're sitting here, we're close here on this candlestick. We just went shy of 70,000 and we're looking quite strong. It needs a little bit of a consolidation within this bigger consolidation. Now, of course, it's a little bit frustrating for us crypto investors because crypto consolidated a lot more than the traditional markets. Traditional markets are all-time highs. Crypto isn't yet at that 74K, 73,700 all-time high. So we've got a little bit of room to go there. So we feel a little bit hard done by. That being said, there's no need to worry. Let's now jump back into the charts. I'm going to show you where I think or hope we can get a little bit of support. And that is going to be this first pivot point here, right? Roughly where we're trading right now is our first point of call that we can, if we're lucky, get a little bit of support. So let's go ahead and drop in that little line there. That will be our first and nice level to rotate at. If we can rotate there, perfect. Failing that, you guys know there's this very important support and resistance horizontal level sitting at 63,800. If we need it, come down, right? For now, that's fine. If we get that, that's brilliant. We can continue our move to the upside and hopefully, you know, even maybe later on today, remember there's still 10 hours for this candle to go. Maybe the bulls later on today can come in, buy that dip and get us closed back above this green line. That would be fantastic as well. And then this whole video is not, you know, not needed for a panic because reality is we're managing to buy the dip back up. But failing that, we need to hold this level of support. If we lose that one, guys, you got to be ready for a little bit more pain coming down to that kind of lower level here of 63,800. Let's also bring out our EMA ribbon just to give you a little bit of context. Look at that. I love when it ties in perfectly. So now my horizontal TA is matching up with my EMA, and you can see how that is starting to move into it. So again, don't be worried if Bitcoin, which is so extended by the way. I mean, people are getting excited. I mean, you've moved from here up to the peak there. You moved 11% spot on Bitcoin. Bitcoin is not a small asset class right now, guys. It's a big beast of an asset class. And so for that to now want to call off, that's perfectly normal. You've moved that much up. You call off a little bit down here, right? You take your calling off down into the EMA ribbon, drop yourself 6% or so, and then you want some support to come in this territory. So I'm looking for a bounce anywhere between these ranges, and then off we can go. We can bounce here, boom, off we go. Obviously, the sooner we bounce, the better. Although, longer term, it's nicer if you come back into your EMA ribbon. There's nothing wrong with you coming down into your EMA ribbon and collecting some support. Let's also zoom out to the weekly as well, just to try to understand, is there any real reason to panic here on the longer time frame? And the answer here, quite honestly, guys, is no. I mean, if you look at this setup here, nice move here, we're reacting off of our EMA ribbon, and it's good. All we need though, guys, we managed to get this higher candle. See this candle here last week? That candle was really, really important. Failing that body candle close above this peak, because look at these candle closes. Can you see the closes? Forget the wicks. See the candle closes here? This candle closed above these, right? So we've got ourselves a slight higher high. This is good because this buys us some time to play the game, come back down again, go back up again. But this time when we go back up again, you see these candle closes here? We're going to beat these, but they're not too far off from where we're at. Right, we've got to beat these, and then eventually we've got to beat these candlesticks up here, and we're going to get a higher high. We've got to keep that uptrend. See these higher lows? This is good. This is good here. This is responding well here. That's fantastic. We need the highs to accompany it with it so we can keep our uptrend going. That, when it eventually then plays out, continues to give us that price target which we're looking for of 90 to 100K. Nothing has changed there on Bitcoin. It just means we might need a little bit more patience given that risk is slightly rotating off here in the short term. Is it reason to be worried? No, but it's still very important that you understand the relationship between all these asset classes. When the bond yield goes up, that is not good for your crypto investment, right? When the dollar index is going up, that is not good for your investment. We need those things to downtrend. That being said, they can't downtrend forever, right? We had a long period of time here where it was downtrending. I mean, if you look at this here on the dollar index again, this is a long period of time to be downtrending, right? All of this time it came down, consolidated for a bit, we pushed it down some more. Maybe it wants to go here. And again, it's not good that it's got above its weekly EMA ribbon, but it's done it before, right? It's done it before, and it's important that we react. We can push it back down to the downside. We want this to keep curling over into that direction here on the dollar index. So there you have it, guys. There is the reason for the 1.3% decline here on Bitcoin today. I'm still actively trading in this market. I'm doing my altcoin trades. I'm sharing those with you guys in my Telegram community. So if you actively want to know how do I navigate this market, not just talking about the macros and people making YouTube videos, no, actively trading with risk management, with stop losses, with take profits. I've shared every single one of my trades for over a year now. Can you name somebody else that's done that? For over a year, every single stop loss, every single take profit, it's all there. So you know that it's verified. It's not just somebody just talking. I'm actively trading this market and delivering yields. If you want to see that, ijazcrypto.com/TG. Hopefully you enjoyed this video. Thanks for watching, and I'll see you in the next one.